Please subscribe, like, and hit that notification bell. Thanks, guys. Okay. Hi, everybody. We got Kevin Wadsworth and a special guest today, Dale Pinkert. Always fun to catch up with Dale. He's a TA guy. I often go on the show, and we love having him on our show. And I remember, like, just a few days ago, I think it was last week, you told me, Dale, something's happening with Nvidia. It's giving up some gains. So we're gonna have to talk about that. And I know you got a few more instruments you want to share your thoughts on. So,
Yeah, I'm not against luck. All right. So, with what happened today, every once in a while it's nice to have a windfall and news go your way. I'm normally fading news, but I don't
Mm.
think I'd be fading this news and buying a video. Let's take a look at it. In fact, you know what, Patrick, I followed your work on Nvidia, and before I really get started, can you guys see my screen?
not yet. No.
Okay, so I have to share. Okay. Oh, you don't see it. Okay, share. Here we
Kevin,
go.
what's written on your teddy bear in the back there?
I think that's world's best dad or something. I think it was a Father's Day present from my two daughters.
Ah,
Well, I'll
nice.
tell you what, that's your best trade you ever made in your whole life. So,
Funny, isn't it,
um,
when you see people on these podcasts, you're always looking at the background and trying to figure out what they've got behind them.
Yeah.
yeah,
It's like a treasure.
people are so nosy. So, I started looking at Nvidia um after their probably a quarter ago at their last earnings report. Let me go to a daily where, I kind of look for where I think people have stops and then uh, wait for the action, wait for it to be taken out. Um, so, that's really what we had here. Would show up on the 4 hour. They just went for all the stops this day, okay, and then close lower. So, I thought we were going to have a head and shoulders top. So I'm short from this day, and I ride it and I ride and I think I finally have a breakdown here, guys, right? And this is when the market was selling off, but we couldn't take out 127 three times with the market going lower. So I said, I'm not going to be stubborn. I just got out of the way, booked it, and said, we could go to new highs. But then I must have been doing an interview or something. This happened real fast. Okay. Was the CEO of NVIDIA speaking at a tech conference, I think it was CES, and, it was a classic pump and dump. Whatever he said, people bought it initially, but, in I think 10 minutes, it did this. Okay. So I said, oh, shoot, now I'm good. Now I missed it. But then we had one more blow off, and I was watching TV, and President Trump had uh, Sam Altman and all those guys, and I hear the name of the project, Stargate, and makes me think about an old television series we used to have, and also made me think of Bill Murray on Saturday Night Live singing the theme song to Star Wars, and all the techs ripped that next day. And I just saw this, and this is when I got a hold of you. I just saw it as, you know what, this could just be a retrace. It's not making new highs with the rest of the market. 78.6,
It
and
was that candle right there. They're the one with the wick on top. You showed me
yeah,
there.
yeah, and I said, this could be a failing rally. It is. It's even approaching some of my initial targets, but I think people probably want to institutionalize me when I show them what my longer term targets are. But here's a return line, a speed line that comes in around 116. Okay, we're not showing the daily action yet, but this is where I think we really could go. I do believe we're going sub 100, and these were the August lows that I think will attack. And I was with you on the narrative before this, and just saw your long-term chart as well, Patrick, about showing that people don't even talk about Nvidia being a bubble anymore, or that it's so owned. And then Apple was a tree that fell in the forest, and everyone said, "Oh, it's just Apple."
Yeah.
Everyone owns Apple. And a lot of people own Nvidia. Sometimes a tree can fall silently in the forest, and that's what Apple was to me.
Yeah.
This was another one I missed. Um,
Look at that fall. It's crazy. Like that went under the radar. It's like nobody like that's a lot of downward. Like what?
because because it's well, sales, China, um, this I think we're going to 170, but these are hard tops to catch because this was a close on Friday. Did nothing wrong, so it has its first down day. You go, well, that doesn't change the trend because this was really a face ripping rally. It outperformed the Qs on this. But maybe it's a harbinger of what could happen in the averages because the S&Ps they closed, you know, they had a great week last week, right? I mean, there were no reversal weeks. We were just down a little bit on Friday, but it kind of reminds me a little bit of keep Apple in your head. And then, there was no reason to expect this type of gap down. And, people who bought this breakout here, they're trying to save it. But this is what I'm looking for. And for a while, people have thought I was crazy, but I like this megaphone pattern. You guys know, ever draw on your charts megaphones?
Oh yeah.
They're like broadening formations. You have it makes higher highs and lower lows, and it's one of the hardest formations for traders to trade. But that's what we have here, and I have a lot of confluence on this megaphone down around 4,900. You can see it better on the weekly. So this is way for a lesser degree. I'm dangerous with Elliott, but I think no one would expect this almost a 40% correction. That I think if it's going to happen fast, and we'll complete it by I don't know spring.
Look at that
OPEC,
divergence, Dell, there with
yeah,
the indicator, right?
yeah. But
It,
you got killed playing it, right? Because it kept making new highs. So that's why I was looking at things like Nvidia. Microsoft hasn't made a new high in a year. That's another one. So I guess people will construe from this that I think there's a pretty good correction coming. So this seemed Microsoft's last high with all of this strength goes all the way back to um, July 24. So you know how many new highs S&Ps and Nasdaq have made, and this doesn't show the action for today. Again, another great close. That's why I think people will be trapped if they can't bring it back. People just sit there like deer frozen, So here's what it's going to look like today. So that's a failing rally too. But enough of that stuff. Let's talk. Want to talk what I think is really interesting. It's not as big of a moneymaker, but I'm in the camp. I think we both we have a little disagreement, but I want to congratulate you guys, on your outstanding forecast for being long gold and long Bitcoin at the same time, because a lot of people are one or the other, and you guys were bullish. I don't know, for many, many, many months, and nice work. But I want to just show the dollar because I think what happened last week is important. Okay. And let's just go to. So you guys are kind of in the milkshake camp, right?
well,
And I think it's we could still have a milkshake, but we might have a float first before the
look,
milkshake times
yeah,
come.
I love Brent and all that. I don't like the word because milkshake. It's like what it's for me. It's like an uptrend. It's just a milkshake is just price going up. So then people
Okay.
just fantasize. What are we talking about? Is it a milkshake on the quarterly chart, on the monthly chart? The DXY 100% uptrend on the monthly chart.
Yeah.
It's also on an uptrend on the weekly, but starting to correct. And like you're showing now on the daily, 100% it's in correction mode. But if you overlay like a monthly chart on that, you put zoom out to the monthly, the DXY is 100% still in an uptrend, right?
Well, I don't know. I think it's been in a range for a while. We had this high back
Last,
here,
yeah.
right? But we're in this range. We tried to break out of the range. I think this was like Euro at 102 was 61.8 back of this whole advance. It's breaking wedge lines. Dollar's doing the same. So actually, what I'm looking for is something like this from here. And you
Mm.
always, I think last time we were together, you said, well, what's the reason besides charts? And, um, Trump wants a lower dollar. Emerging markets want a lower dollar. China's not going to be against it since they want to de-dollarize anyway. And, you know, uh, it, our fiscal position may finally matter after not for 40 years. So I think we could see the dollar sometime this summer or maybe even sooner trade under par towards 95. If I want to get real bearish, I could just uh, when we break down par, look, par is a big level, look left, it face false breakdown here, had a couple closes down here, but closes under par is going to measure 86 because it's a 1400 point formation. It's not rocket science. I say to people, you could add and subtract, multiply and divide. You could be a technician. So that's my view on the dollar, and I think that's what's been missing for silver. Historically, and I know you guys do a lot of great long-term historical. Um, I didn't back test it, but I learned it from someone I interviewed that he said almost every bull market in silver was accompanied by a bear market in the dollar. So to have a bull market in silver, it's usually accompanied by a weakening dollar, unlike gold that could fight it. And you know what? Silver's done a great job of fighting a strong dollar. I'm not looking for a collapse, but maybe we could see just one more shakeout here. And I think it's going to be a great buying opportunity. But we start closing back under 30,
Wow.
we're going to challenge it. And I have return lines actually starting at 28. And I have another reason, but unless we close over 31, I guess the picture will change. But sure has tried. So I think 20, 28. Some people are talking 27. I don't know, but this is going to be, I think, the end of the correction from all the highs that we've had. And I've seen that this could start wave three. And the other piece of evidence that's kept me out of silver has been this. I mean, your preferred long when the gold silver ratio is going up is gold, right? So when you're bullish, the metals, you buy dips in gold. When you're bearish, you sell rallies in silver. And we're starting to approach targets. I think we're going to get to maybe about 93 or so. And that could be 2 days away. So things are lining up for silver. Um, Maybe Feb or March, um, but I'm stalking it.
Your
So
target's not higher for the gold silver ratio. Your 93 target is that's on the what time frame? Not on the daily. On the daily?
yeah, yeah, this is a daily right here. 93. We're at 91 right now.
Okay.
So we have, and this, normally this correlates with the dollar, and this is a fly in the ointment for a dollar top. But um, I think here's something I wrote about, and I want Kevin, I want both of you guys to, you know, give me your feedback on this. So we really have a new regime here not just in America. Ripples from whatever happens here in America. And some of the old correlations that I used to, pay attention to, they may not be as dependable for a while. So to me, it's more important right now just to focus on the relative strength in a sector. So, you want to be long the leader, right? And not long the laggard. Like, palladium looks good, but you had to wait a long time and probably were early instead of buying gold. Or when it comes to the market, the tech sector, you even could go within a sector and say, well, out of the tech shorts, Nvidia looked like the best one. Certain ones were pushing new highs. Before today's open, I thought maybe Google could have made a new high, wasn't that far away. So you really have to pay attention to just the sector. And, like the yen and yields correlation, that may work. Or, you're looking at the bonds and you're looking at what's happening with yen. That may still be attached, but I'm just going to focus on the sector itself and identify the relative strength, and you could do it in all kinds of instruments. I use euro pound to help me diagnose um, whether or not I should be long euro or short pound. And actually, this was something I brought up in Face and brought up on my streams on TGH. I don't sell, they don't sell subscriptions at TGH. Anyway, when the euro is making new lows, and I said this before euro made new lows, I said the spread will turn before the market will. So when back here, when euro is making low on the 13th, euro pound wasn't even euro pound was breaking out. Okay, so that gave me more confidence in being long euro. So we may have a pullback here in EG, but I I say you have to buy sell strength in the dollar by weakness in FX until proven wrong. And you don't even have to risk. I don't think you even have to risk the lows anymore. But we probably shouldn't close back under 103 and a half. This was a pretty big level. So some changes. Dylan said, the times they are changing by Trading Warrior Brothers. What do you think?
Well, it's it's a turning point, Dale, isn't it? Because I think you might be aware perhaps of the theory around capital rotation and what happens when every so often capital adversely flows away from stock markets towards precious metals. And that's what we're talking about with gold breaking out versus the S&P. There are periods in history when uh, gold breaks down versus the S&P, and there are periods in history when it breaks out versus the S&P. The gold to SPX ratio is critical to keep an eye on, because when the gold to SPX ratio is 0.5. So when gold is worth 50% of the S&P, then that's a turning point in this particular cycle. So we would need the S&P to fall to about 5,400, assuming gold stays fairly close to where it is now. So if the S&P were to fall down towards 5,400, 5,500 at the moment, then that would be pushing us into a capital rotation event. And that is an event where gold would go on a multi-year, probably a decade-long bull run, and gold would double, and then it would double again, and then quite possibly double again after that. And during that 10-year time period, the S&P would be expected to fall 50% over a 2-year period, and then take the next 8 years to get back to where it came from, during which time the Nasdaq should fall 70 to 80%. So that's what a capital rotation event is. It happened in the year just after the year 2000. It happened in the 1970s, and of course we all know about 1930 as well. So these capital rotation events in favor of precious metals, they come along not very often, And we're on the verge of one now because all of the indicators are, or I should say, many of the indicators for a capital rotation event have already happened. Gold has broken out versus money supply. It's broken out versus DXY. It's broken out versus CPI, PPI.
Right.
So all of these indicators are suggesting that capital rotation process is underway. And the only thing that needs to happen now for the event to be confirmed is for
Is a
gold to
break.
break out versus the S&P. Now, if and when gold breaks out versus the S&P, everything changes. I mean, everything changes for investors throughout the next decade. And if you're not on top of this, and if you're not following this as an investor or a trader, then you really should be, because you'll be wrong-footed and you'll be like a rabbit caught in the headlights, not knowing what to do. But these long-term charts really do help to keep you on the right track. Yeah, the details can be tricky, and which stock and which is the leader and which is the laggard. Some of the precious metal stocks are really leading at the moment, and some are doing great, even though the majority haven't broken out versus gold or versus the S&P.
You're talking
So
about miners now?
yeah, so for
You
example,
like them? All
GDX,
right. Because you know what I say, and I like them too.
yeah.
That even physical gold and silver bulls hate the miners. They're
For
universally
good
hated.
reason.
Huh? Huh? Well,
For good reason,
well,
because
you know what the reason was? They were early. That
yes,
doesn't mean that they're.
yeah,
I'm glad they hate them. They'll hate
yeah.
them all the way up.
And the point is with the miners,
They're,
the time to buy them is when gold breaks out versus the S&P, because until then, it's not kind of a light bulb moment for the big investors, the hedge
I'm
fund,
glad you brought
people
it up.
who are wanting to put big money into the miners. The light bulb moment doesn't arrive until gold breaks out versus the S&P, and when it does, you're going to see a fire being lit under the mining sector. There are some that are leading at the moment, but the index, the GDX, the GDXJ, SIL, SILJ, HUI, they have not broken out versus the S&P, and they've not broken out even versus gold yet. When they do, then you better stand back, because the big gains will be coming. But there's no need to front run it. Technical analysis, the GDX chart itself looks good, right? You've got that
Yeah,
there,
look,
but
this is
GDX,
when I
GDX
put it
versus
out.
gold is a different matter. Yeah,
Yeah, yeah.
yeah,
So over the next month or so, we could retest down here.
yeah.
I think that'll be the time. I mean, look, people could say they hate the miners, but don't tell me that they never work, because, from last March, I mean, this went from 4 to 8. Um, this was even bigger. It bottomed before, so the other shares did at $2 and went to above 6. So you still have to pick the right ones, but they do work. Here's another one. These are silver shares. So this was a buck 40. It went to 550. That's for four banger. So a lot of these are making higher lows, and I assume they will. And there's nothing wrong with GDX. If you look at GDX on the weekly and you just take the COVID range here, I think this was it. Yeah. And you tack it on the breakout, you get like 65 or 70 on GDX. So that's what I'm saying. All these things are lining up. The gold silver ratio should be peaking around this time, and we get a correction in the stock market. And if it's at least a 10% correction, Kevin, don't you think it's going to put pressure on everything for a little while? Bitcoin,
10% correction for the GDX or for the stock market, do you mean?
stock market, put pressure on everything else for if it's a swoosh.
Yes, I mean, precious metals could well soften for a while as well, but it's not so much the nominal amount that precious metals fall, it's the amount relative to the S&P that is going to be the key here.
Right.
If the S&P falls 20% and gold fall, well, okay, let's say the S&P falls 10% and gold falls 5, 6, 7%, that means relative strength for gold. And this
Yeah.
is what we're looking for now. We're looking for relative strength for gold to start giving us the clues about what's coming next. It's try not to. I would say to investors watching this, don't focus so much now on the nominal values, but price everything in gold and look at how much the price of things are changing in gold. So S&P priced in gold, Nasdaq priced in gold, Nvidia priced in gold.
Yeah,
Whatever
everything.
you want, because gold is in a bull market now. We've established that it's in a bull market, probably moving into a bull era, which is going to last a decade. So we know gold is outperforming the US dollar. So if you're going to buy something, the very first test you have to apply, is it outperforming gold? Because if not, you might as well have all your money sitting there in a big chunk in either digital or physical gold. Lots of ways of owning gold at the moment, of course, but you may as well have your NAV sitting in gold, not in US dollars, because we know gold is outperforming the dollar. Then if you're going to buy something else, whatever it is, any share, whatever company it is, make sure it's outperforming gold, because if it's not, then you have to question why you're bothering.
Okay. You have any you like?
In the gold sector, there are a number. We did a podcast for our members a couple of days ago. I think there's one that what was that one that you were looking at, Pat?
Or the mining.
Orla is one of them. Yeah, Orla Mining has been
Yeah.
outperforming.
What's the
There's a bunch.
symbol? What's
Um,
the symbol?
ORLA.
ORL,
RLA?
Yeah, there's a bunch of
ORL,
miners
Oh,
that do much better. Everybody looks at the JDX, but I'm telling you, there's like Wheaton, Dundee, uh,
yeah.
precious metals,
or
yeah.
there's a whole bunch that track gold like very closely that
Oh,
are,
I
are
know.
are playable.
I
That
know this
one,
one.
I think it's been an uptrend for like ever. Well, not ever,
Yeah.
but since that breakout back there, that like
Yeah, that's nice.
there's some good looking ones. You could put a Dundee Precious Metals, Wheaton. I haven't looked at them in a while, but they've been just tracking gold. You overlay those charts with gold and say, goodness, why would I go into JDX when I have some actual miners that are actually tracking the price of gold?
It was,
Yeah.
AGI was one that we pulled out for our members as well, which is Alamos Gold, AGI, and that's performed,
AGI. Yeah,
yeah,
there's
performed
there's
very
like
well reaching its target.
some great ones in there. They're not penny stocks. They have high liquidity. People are able to trade good amounts of money without impacting the price. Because those miners, those small cap miners, guys, people, oh yeah, yeah, they get 10 baggers. Yeah, but goodness, there's no liquidity in there. Of course, like if you're putting $500, it's fine. But if you have any serious amount of money, you can't play those things. They're unplayable.
Okay.
Oh,
All
Alamos
right.
is cooled down there, but that's some type either a top or a flag they're
Well,
building
yeah,
up.
Yeah.
it reached its target, so we pulled that one out for our members somewhere around $8 or $10 and gave a target somewhere up near 18, 19, I think it was.
Well, one of my themes for 2025 is um, sell things that people own, buy things that people use.
Mm.
Yeah, that's as a general rule, that's probably going forwards going to be a fairly good good yardstick.
And you know what? As far as bringing food prices down, they're and it's more than eggs. But in the last couple of years since the invasion of Ukraine, all the grains have been in a bear market, all of them. And they've been basing for a long time. So if you can't bring food prices down with a bear market in grains, and I'm in California and we've had these fires, guys, and it's because I believe La Nina, because I've lived out here in both El Nino and La Nina, and La Nina is the cold dry. It produces cold and dry and droughts, and Southern Cal's only had half an inch of rain this winter, and that's why the state's on fire. But
Mm.
that current also has the propensity, I've seen it, move into the breadbasket, into the Midwest. And China's in buying soybeans. You know, I don't know how tariffs are going to affect the grains, but you have
Wow.
potential of the grains all bottoming out here. Corn led the way. These are ETFs on it, but you know, that's been a nice move in corn. That's been a nice move in wheat's been the dog, but beans. And when I was in Chicago learning the business, the beans and silver were correlated. Um, they were both in bull markets, and at times they were trading in. So let's see. So silver, yeah. So it's $22 against 28. So if you think you're going to see $40 silver, I think you could see $40 beans. And so, how is the current administration going to bring down food prices? if we're going to have a bull market in grains, which go into everything. Um, that I think is going to be a very difficult promise to deliver on. We'll be paying $20 for eggs probably here by the end of the term. Do you like eggs?
Well,
You know,
those.
they used to trade them at the Merc. They had an egg market, but
Hey, look
but
at that.
but too many accounts got cracked. You get it?
Oh,
No.
very good. Very good.
Anyway, it's cool to see you guys. That's a majority of what I think. I think, it's going to be a great trading environment. As you can tell, the character of the market has changed. When you really changed in August, right? So the ranges are all expanding. We're starting to get more volatility. Um, you guys think that if Bitcoin, I know that there still could be maybe another high for a three up here, but um, I know some people are looking for a top in Bitcoin, and it's a liquidity thing. Could Bitcoin go to 116 with the market selling off?
It's unlikely. I think there's a high correlation between cryptocurrencies and tech stocks, and
Okay.
it's a question of time now because the Bitcoin cycle should take Bitcoin considerably higher. And if you look at past cyclical behavior, but there's a time factor here. If the markets begin to break down and Bitcoin isn't done with its bull market, I don't think Bitcoin and crypto can go against a falling stock market and a plunging Nasdaq. So, when the capital rotation event arrives, I don't think crypto is going to like it one little bit. Whether
Yeah.
there's enough time left, whether we can stave off the rollover the stock markets for long enough remains to be seen. But that will come out of the gold to SPX ratio, and that will be what really tells us. It's interesting that Bitcoin hasn't yet broken out versus gold compared to the high it made back in 2021, I think it
Yeah.
was 4 years ago now. So gold put in Bitcoin put in a high versus gold back in 2021 with a Bitcoin to gold ratio, and it hasn't yet broken out through that. So it sort of feels like time is potentially running quite short for it to do that and put in a much higher high. But Bitcoin, don't misunderstand if you're watching this, of course, because Bitcoin is in a bull market, and you have to define your definition of a bull market by time frame. On the big time frame on the monthly chart, Bitcoin's in a bull market.
Yeah.
On the weekly time frame, it's in a bull market, and that hasn't changed by just dipping down to 99,000 or whatever it was. So,
Well, we could go the above the breakout to like 80 grand and still be in a bull market.
yeah. Again, it's how you
So
define your bull
yeah,
market, of course.
yeah.
It's there's no major issues with Bitcoin at the moment, and until it breaks down, until the S&P actually breaks down decisively, then on their own merit they look fine.
So they're trying to bring Apple back today, but there are a lot of gaps. There's people trapped.
Well,
There's
it's like you said, Apple already did its drop, right? And the
yeah,
other ones
right.
are,
Yeah,
it already did its that's what 20% off the top to like how
yeah.
much was that from peak to now? Apple looks like at least 50%.
20%.
20? There you
Uh,
go.
yeah, or 15 because it was 260,
Yeah.
dropped $40, 15%.
But what I see,
Google, yeah, look at it. I mean, we're leaving some islands.
yikes.
So,
That looks like a false breakout to the upside with a reversal.
yeah,
That's
yeah.
dangerous.
And there's Nvidia.
Look at
So,
I saw Cameco. What's happening with Cameco? Do you
oh
check
yeah,
uranium?
I do. I check uranium.
It's like down 11% there today. Goodness gracious.
Yeah, that's not good.
Look at that. What is that about?
Yeah.
Yeah.
It
Wow.
looks like if they don't hold 48, we're going to retest these lows.
That a head and
That's what I
shoulders?
mean.
Goodness.
Yeah, it could be something like, or at least, failing rally
Yeah.
here, and you could take fib extension of this move, like 1.618 from here, could take it down there. So what I'm saying is, for a lot of people, I'm not saying this is the end of the bull market in stocks. I'm just saying there's going to be a shakeout. So all the boys can buy what they want at better levels. And I think that's about a 2 month process. I want to load up on miners. What else? What other sector? I'd look at uranium. I'd look at, like I said, things that people use. That's what I want to buy. With agriculture, you could look at fertilizer stocks, ag companies. Um, you know, China knows about this, and that's why they made one of their biggest bean purchases in a long time.
What about oil or XOP or one of these
Oh,
ETFs there? Because that's
yeah,
how's that
yeah.
looking? Or what's your
Well, I'm thinking that same thing, that oils will get cheaper into that time frame. Really all the markets have gone up together and down together with some differentiation, but not much. I mean, or magnitude, which is why the ratios are changing for you guys, and gold's starting to look better.
Yeah,
But
I mean
it's
those
still
those
been,
those ratios are so important. If I think if people are wanting to sort of figure out whether the drop in the S&P is just a pullback or whether it's something more serious, we'll know when gold breaks out versus the S&P, because until that point there are no concerns. The S&P can do what it likes. It's in a long-term bull market. It can go up, it can go down, whatever. But and when gold breaks out versus S&P, that's when everything changes. So that is the one chart that I would send everybody to look at. When gold to SPX ratio is when it crosses the 0.48 boundary, and particularly when it crosses the 0.5 boundary, that's when you can forget about the stock market for many years. That's when you have to focus on gold, silver, and commodities. So until that happens, then no dramas. This pullback, it's nothing to worry about until that ratio breaks out.
okay.
That's my
Well,
that's my that's my
yeah,
view, and
no,
I think that's Pat's view as well.
I mean, I'm not saying it's anything to worry about. I think it's something to capitalize on,
Oh,
and
of course, yeah, absolutely.
and they are bringing it back pretty good.
Yeah.
And it's also, going to set up great opportunities. Maybe it's just going to blow to new highs. I don't know. Nothing surprises me anymore. I've seen everything and anything, but
Yeah.
I think this is kind of at least a crack of thunder. This type of
Mm,
opening that the
mm,
markets can do this overnight.
mm,
So, I would tell people to reduce leverage
mhm,
in this environment until, this is going to be, it's changing everything. You don't
mm,
go through a transition, I don't care what it is, even personally, without rocky times to get from one side to another, from
mm,
something old to something new.
mhm,
It's not going to be smooth sailing. There's going to be lots of trading opportunities because of it. And the days of being able to just own the spider and go golfing for 3 years are over.
mm,
You're going to have to learn to be more tactical than just, passive. I think passive investing is going to have a hard time. I think you have to learn about when to be in and when to be out, and the everyone said that you know things always came back, but do you have 20 years for things to come back if things really get ugly?
mm.
Let me ask you guys something. What do you think this drama is going to be like between President Trump and Jay Powell? Um, he can't fire him; it's illegal. He's probably not going to lower rates here this week. Um, what are you guys thinking? Are we looking at is the Fed going to put up a fight to protect the 100-year institution, or has Trump just given them cover for easing when they decide to? Well, you have a oh, come on, Kevin, make something up. Well,
Well, my view always goes back to the charts and the technical analysis. The 10-year yield broke out a number of years ago, and it broke
yeah,
through something
yeah.
I called the pain line, and that instantly made the debt burden relevant. The debt to GDP was um, rising and has
Yeah.
risen from 30% to 130% from 1980 until now. And the reason the 10-year yield was dropping and was contained by that pain line was purely because in order to keep the debt sustainable and repayable, the interest rates had to be kept and capped at a particular level. Well, they broke out.
Yeah.
Unfortunate guys, the market wins. So they broke out, the market wins, interest rates, or I should say the 10-year yield, the rate on the 10-year bond, rose all the way up to almost 5% or around about 5%. And it
Mm.
hasn't plummeted. A lot of people
No.
expect it to go back down to 2%. Well, it could go back down to 2%, but that doesn't change the fact that we
No.
are now on the other side of the pain line. So we're in the
What
same
what's
environment
a
as the 1960s and 70s.
what's a yield level for the pain line?
It's now all the way down somewhere around about 2%, just below
Oh,
2%. If
okay.
you zoom right out on the monthly time frame, it's a descending wedge that we broke out of
And zoom
that
out
goes
all the
back
way back to the 60s. But
all the way back to the 60s.
Oh, the 60s.
Yeah,
Oh my,
all the way back to the 60s, the good
right,
the
old days.
60s.
right.
Put it on the monthly time frame, all the way back to the 60s, and yeah, you can see that descending wedge. Look at that
Yeah.
beautiful breakout.
Yeah, right here.
Zoom out
That's
even
what
more there. Zoom out
that's
more.
yeah, all the way back another 3 decades. That is a um, you put it on the quarterly chart. There you go, perfect. That is what you call a regime change,
Yeah.
paradigm change from 1980 to 2021. That was one regime, constantly reducing 10-year yields. And they were reducing because, unlike in the 1970s, where debt to GDP was falling, now from 1980 to now, debt to GDP is rising. So when debt to GDP is rising, your interest rates have to come down. If they don't come down, your debt becomes unsustainable. So you can draw a line on that chart and it's called the pain line. You cross that
Okay.
line, there's a whole world of pain. So what we're now experiencing across the economy in a number of different ways, the cracks appearing right, left, and center over the coming, months and years, is as a result of crossing that pain line. And there are lots of other moving parts to all of this, but I think it
Yeah.
does come back to that, and gold breaking out versus the S&P, and the fact that gold has been doing so well comes back to this debt
Yeah.
unsustainability.
Yeah. Yeah. And you think about it just if you covered up the title. So, and the time frame, just a 50% retracement, 15% to zero, he gives you like 7.5, 8% 10-year yield.
Yeah, yeah.
And what you said there is perfect, Dale. I like it when you said that. Cover up the title, cover up the time frame, just
Yeah.
do the TA on it as if it was any other chart. I do that with crypto, Bitcoin,
Yeah.
Fartcoin, Trump
Yeah.
coin,
Yeah.
gold, silver. They're all the same. You just cover up the title, cover up the time frame, do the TA. There's no bias when you do it that way.
Exactly. What a great tip. So, we talked about some, markets and some trading psychology and tips. And so, if you're a currency trader, I'm going to be using any new tariff news if dollar rallies to sell the dollar. I pretty high conviction. I know where I'm wrong now. Over 110, I'd get out of the way. 78.6 was 111 on the Dixie, but I think this is, you know, just starting. So let's see what kind of month we have a reversal month going here. So I don't think that's going to change. And well, look at this. So, there are lots of levels down here, but this is where the panic starts,
Mm.
closing back under par. Okay. So I don't know why we couldn't have this. And this was impulsive. This, especially the first month, that covered a lot of ground in a short period of time. This, to me, there's nothing impulsive. It's just corrective. And I think this correction off this break has concluded. I'm wrong over the high, but you know how people, and I used to feel late if I didn't catch the top or the bottom or pretty close to the turn day. Um, you have to get over that. In fact, it's probably a better short now than it was when it was a theory. Okay, 109, 110 was a level I wanted to sell at, but I didn't have anything but counts. I had some divergences, But now the theory has, at least in a way, been uh, justified by the action. So now's the time to, let that narrative play out, sell rallies in the dollar. I think sometime that by this summer we'll be trading in this, under 100.
Something I always like to point out when you have the chart of the Dixie on there like that, the US dollar index. Your chart there starts in 2008 when gold was $1,000 or less. It
Oh,
might have been
oh,
during the
great,
financial
great
crisis
point.
there. So
Yeah.
gold was down at $1,000. Dixie's gone from bottom left to top right. Gold has also gone from bottom left to top right. It's gone from $1,000 to nearly $3,000, $2,800. So the conclusion from that is that the strength of gold is far greater than the strength of the US dollar versus its basket of other currencies. So whatever US dollar strength we've seen, that is completely knocked out of the park by the strength of gold.
There might be a section of trading that'll keep people, might catch them wrong-footed. So just like gold went up, even though the dollar not as strong as gold was going up, that if this bear market in the dollar and people start putting the D word on it, that it's because we have a growth scare or a recession, that gold could come off with that as well and set up a great buying opportunity. That I think there'll be a chance to buy gold in 2,400 sometime this spring.
Yeah, that is quite plausible. Yeah.
And I would, and I'm there. And all the miners, thanks for a couple more for me to look at. The universe is so big.
Mm.
Um, I interviewed a guy, he does a lot of pinks, and I looked at him. You have to make an appointment to do a trade. I want someone on the other side of the trade if I hit the button. Not, well, I'll be there in about a half to hit your offer, So yeah, stay with uh, liquid companies, no matter what the sector is. And if they look like dots when you put up a 10-minute chart, take it off your screen.
That's brilliant advice. I wholeheartedly agree with
Yeah.
that. Yeah. Okay, listen, Dale, it's been incredible talking to you. A wealth of experience there, and it's always nice to catch up and hear your thoughts, especially at times like this when the markets are volatile and wrong-footing people. And it's great to have that kind of voice of experience there, Dale. So we always appreciate speaking to you,
Yeah.
and appreciate you giving up your time to talk with us.
Yeah.
Can you remind everybody where they can find you, Dale?
Well, I host a show for trade for Forex Analytics called Face every morning. Uh, at We start at 9, 8. We start at 8 a.m. You could tell 8 a.m. every day, and I also do analysis for TradeGate Hub. We have a YouTube channel, and I put my work out there a couple times, uh, 2, 3 times a week, and I do interviews. I've interviewed Pat on there. So I want to thank you guys because I always learn when I'm with you. And here's my war cry for this year. Let's all have a great decade this year.
A great decade this year. That's a good one
We're
to
in the
end on,
business where that can happen.
Yeah.
Okay. If we're
Well,
our own worst enemies, get out of the way of your success. Try that one.
Yes.
And follow guys like Patrick and Kevin, who have a great look through their Hubble telescopes that you wouldn't be able to do on your own. If you're an amateur, don't do this at home by yourself. Find a community too, people that you can bounce ideas off of because you only have two eyes. So I know that that's probably one of the reasons for this, how this partnership came to be, that they both have great styles. They're a little different and they blend good together and they reinforce each other. So 1 + 1 could equal 11.
That's right. That's how you do math in Canada.
All right. All right. So thank you guys for having me. Good hunting.
Yes.
All
Take care,
right.
Dale.
See you down the line.
Thanks, Dale.
Adios.
Bye,
All right.
guys.
See you, Kevin. Bye-bye.
Please subscribe, like, and hit that notification bell. Thanks, guys.